Aaron, just to give everyone an understanding here, I've asked this question of our previous guests as well, is how do you see investors use Modiv allocating to Modiv as a piece of their overall portfolio? Is this you see this being a core position? Is it, or, I guess as a percentage of assets?
For me, look, I think the best way to think about real estate, if you're taking it from a sort of where the smart money is sort of that sort of endowment foundation model, right? So if you look at the Yale endowment model, foundation models, what they do is they tend to allocate a percentage of their portfolio beyond just stocks and bonds and into alternatives, right? So this is what we're talking about here is alternatives. Real estate is one of the classic alternatives. Allocations for the institutional shops tend to be between 5 and 10%, right? 10% being sort of the ideal number. And then what they're looking for real estate is they're looking for real estate to provide income and the adverse price volatility, right? So when you've got your stocks gyrating around, your Tesla's going up and down, you're looking at that could be more speculative than your blue chip name that you're owning. Real estate's designed to provide you income and capital appreciation, but it's a counterbalance to that portfolio. So a lot of our people are looking, they're not going all in real estate because look, real estate has risk like any asset class, right? You have liquidity risk, you have price risk, but they're putting roughly 10% of their portfolio. Sometimes they're putting more, sometimes they're putting less. If they're just starting out, I think the encouraging thing about that is a lot of people say, well, I don't have that much money, right? I got $10,000 in my PA, and what do I do with it? And so $1,000 into real estate is a good way to allocate because there's something very emotional about investing as much as there is about financial, and it's about knowing. Like here, you get to know that you're owning a slice of $500 million of commercial real estate, and it only took you $1,000, and you didn't have to do any of the headache. Right, and so it doesn't need to be a big piece to be a satisfying and a complementary portion of your portfolio. So that's how we generally view it. We try to discourage people to put too much in. Look, I think you should have eggs in different baskets. This is a volatile time. This is an interesting time, but there's also a lot of great opportunity. So why just pick one?
Could not agree more, guys. Aaron Halfacre is the CEO of Modiv. Let me put the link up on the screen. The link is also in the description, modiv.com. Aaron, a pleasure to talk to you. The space is endlessly interesting, and good luck, and thanks for coming on All Access today.
Spencer, thanks so much for having us.